Well, we're happy to have Rick Lindsey on our podcast. Real quick, Rick, if you could tell us a little bit about your background and how you became interested in the insurance industry.
Well, I don't think anybody ever actually thinks I'm going to be an insurance guy, but my dad owned an MGA when I was young, and I used to stuff envelopes and take the mailers to the post office and sort them, and so I'd actually been, involved in it since I was 12. Didn't really think I would do anything except be a professional athlete. First, I was going to be a professional quarterback, and then I started playing hockey and really excelled at it, and was asked to try out for the Olympic hockey team in 1979, went to the training camp for 90 days and got cut from the Olympic hockey team. And since I hadn't really planned, I said, what can I do to take care of myself? And, so I jumped into my dad's business. And then in '82, he sold that, and I started my own agency, writing recreational specialty stuff that was very difficult to place at the time, like helicopter ski guides and rafting in the Grand Canyon, mountain climbing. And, basically during that 10-year period, I proved that release forms, where you sign them in recreational cases, can be very useful if you get sued, if you did everything right? If you're negligent and you think this piece of paper is going to prevent you from being held responsible, that's wrong. But if I do everything humanly possible to keep you safe, and you're injured from the inherent activity, the risks that are inherent to the activity, we don't have to pay those lawsuits. And the insurance industry, believed you did. And same with trucking now, right? If somebody runs into your truck and they're in a wheelchair because of their own actions, do we have to pay them? And I would tell you that you do if you never go to court. If you never go to a jury and you settle everything like all the lawyers want us to, which now we settle about 98% of all cases. And the cases I deal with have about 10,000 insureds. Most of them are an accident, right, where stuff happened and we may be some percent at fault, but we're not at fault. We're not 100% at fault. And if we are 100% at fault, we should pay that claim. When we have a claim, we want the insured to report it to us directly, like a bus accident. We want to have a face show up where the people are in the motel or the hospital and give them access to us so that we can deal directly with them. The lawyers are there. The plaintiff's lawyers show up there. And it's interesting because, most of the people will say, well, I was thinking of getting a lawyer. And I said, we're not here to stop you from getting a lawyer. You can always get a lawyer. We're here to give you access and try and do the right thing so you don't have to get a lawyer. And, if we will make you whole, why would you get a lawyer? The reason people do is because they think they can get more money. And that's what the lawyers will always promise is whatever they're offering you, I can get you more. And I don't agree with that. You'd have to listen to what we're willing to pay you first. And then if it's unfair, maybe you need a lawyer. But if you hire a lawyer, it's going to take a long time, and you're going to spend a lot of your time and a lot of your money paying the lawyer. Now, you don't have to pay them up front, but when if we should have paid you 30 grand and they get you 60, you're not going to end up with 30 grand. You're going to end up with less than 30 grand, probably 3 years down the road. So again, the opportunity is like the old Westerns, you head them off at the pass, right? Go be proactive and do the right thing. Don't sit back and wait to see if you get sued, because I guarantee you are going to get sued because you didn't do the right thing. You didn't give them the chance.
So you've been in this industry for over 40 years. I'm sure you have a pretty unique perspective. So what would you say that the insurance industry is facing as far as the largest challenges today and versus what you were tackling back in the 80s?
Well, I think it's basically the same. I think, back in the 80s, it was small, little businesses like daycare centers, roofing contractors, outfitters, and guides, because they weren't big business. But, they still struggled with the same thing, right? They need a good insurance partner who's going to stick with them in the tough times, not just the good times. And at the root of this all is, most people hate insurance, right? I think most people hate lawyers too. And what we have to do is get better at heading them off at the pass. And our goal should be to make happy customers. But as you guys know, we have these calls with people before we underwrite them, which I think is critical to setting up anything in life, how building a house, handing a baton off. It's all about the setup and making sure you have the right foundation to execute down the road. So we can win if our goal is making happy customers.
Sure.
Right? So how do you make a happy customer? It's kind of like making a happy wife, actually. You have to have discussions. You have to have expectations, and they need to know what it looks like, and I need to know what it looks like too. So, and the question I would ask people is, okay, so what claims do you want to pay? All right, do you want to pay them all? And, if we pay $1 million on them all, we could pay $5 million on all those claims too. There's nothing holding us back from paying more, and that's where nuclear verdicts and social engineering comes from. It's pushing the number up. All fake news if you do your job right and you lay your track right. So, rafting company, right? People fall out of the boat and drowned. Do you have to pay them? Well, insurance back in the 80s said you do. Right, we have to pay these people. Well, I didn't agree with that, and I took a case to the Supreme Court in California called Saines versus Whitewater Voyages and won. And since then, that is now the cited case nationwide in all release form cases. So, getting back to making happy customers, Mr. Insured, the guy didn't fall out of the boat. He had a heart attack in the boat. Right? He's like, well, isn't that why I buy insurance? Right? I feel bad for the guy. I'm like, I feel bad for him too. So if he died at home in his lazy boy a week ago, before he came on the trip, you can pay him too. Right? If they think you'll pay, they'll sue you for that and claim, he was nervous to go on your trip. You should have declined him to go. He was overweight, had bypass surgery. After the claim or after the accident, they're going to suggest everything, right? If you want to go on a rafting trip down the Grand Canyon and you just had double bypass surgery, you should be able to do that if you want. We're not looking to exclude you. One of the things that in California I did with the case we won is before you went on this trip, you had to swim the rapid across the river and back. And the good outfitter said, okay, I'll make them do that. The crappy ones would say, well, that's why I buy insurance. I don't want to make them do that. Half of them won't go. I'm like, yeah, that's kind of the point. You need to be honest with these people, and if you put them on this 3-day trip, they are going to swim, right? So the way to actually them to assume the risk is make them swim.
Sure.
Don't just tell them, hey, you might swim. Right? Actually put them in that position to make the decision. And then we can go to court and win because we have the right facts and the right setup. Or we can do all that, like with trucks, they hire new risk managers, they put cameras in, they do everything to put themselves in a position to win, and everything says they're not at fault, but the guy's in a wheelchair. You know what the lawyers are going to tell us? Pay.
Sure.
When you don't have to, right? And I have thousands of examples where we have won, right? Everybody says, so do you ever lose? Yeah, we lose, but winning 80% of the time is all we need to do to win overall.
Sure.
So, make happy customers. That's what we need to do, and we can actually stop growing lawyers and growing the legal system because they're taking advantage. They're like linebackers shooting the gaps, right? You take somebody's money, you underinsure them, right? The roof is too old. It should have been replaced 10 years ago. You still insure them. And then the house has a claim, and you want to start pointing out the stuff you should have talked to them about before you took their money.
Yeah, I think we've heard that a handful of times. You'll be quoting a client, you look at their loss summary, and they will point out 2 or 3 losses that they say that should have never been paid because they had nothing to do with the accident, whether they be rear-ended or whatnot. Maybe let's talk about how has Prime evolved since its inception, and where do you see Prime going over the next few years?
Well, I mean, Prime, when I took it over in 1995 in Chicago, it was, going bankrupt. The shareholders had put $20 million in, started writing premium, and they lost $18 million of it, and then they shut it down and let me buy the old manager out. So last year we did about $450 million in premium, all 50 states. We have the admitted company in 10 states because you can't write commercial auto as a surplus lines carrier in those 10 states. And so that's what the admitted company's for. So we're writing commercial auto in all states except New York. We don't write primary commercial auto there because the department doesn't want us to. And my approach with departments, I was just in Louisiana with Commissioner Donelon, and really no agenda. I just told them we're here, we're ready to help. We write homeowners, commercial auto, which they say they need help with. And they asked me, what I wanted to do. And I said, well, number one, I don't want to do anything that gets me in any trouble, right? I want to be a solution provider for regulators. If you don't want me doing something, tell me, and I won't do it, because they are the regulator. And I've dealt with Commissioner Donelon since, I went to Illinois and took over the company because it was approved in Louisiana at the time I took over, and then the companies that were part of the Illinois Insurance Exchange were all going broke, so he kicked us all out. And actually, he kicked me out, and we didn't write any property there for a year, and so I didn't have any Katrina claims in Louisiana. I had them in Mississippi and Alabama. So I thanked him today. At the time, I was like, I wasn't happy that you kicked me out, but thank you. It saved me a lot of,
Sure.
time and money. So, anyway.
So we were talking earlier. You said that there's some Hollywood stars that you insure. So, is there what common misconceptions do you see in insurance, basically, that Prime educates their clients on, and is there anything particular that you do for hiring clients like that?
Well, I mean, the wealthier people and everybody has always got cheap insurance, right? So again, the way that this whole deal works is we form a company, we want to write Florida homeowners, or we want to write trucking nationwide, and we hire an actuary, and that actuary works with an underwriting team to develop a strategy where you're cheaper than the competition, and you write the business you think you want to write, right? And then 5 or 10 years later, you figure out, oh my God, we're losing money, and so they decide they don't want to do that anymore. So, hiring an actuary to tell you how to compete with very aggressive pricing, to me, is a recipe for disaster, right? And at the foundation of all of this is, nothing against actuaries or whatever, but if they were so smart, they'd form their own insurance company and they'd just go do it.
Sure.
Right? But I think it's a lot harder job than they think, and I think it's the art of managing the claim and underwriting together. You can't do it bifurcated. You can't separate it, and our business has evolved in a way where it's totally separate, right? You're underwriting trying to avoid the claim, And then the claims, you kind of outsource to people. When I was young in my dad's MGA, I was probably 17, and USF&G was next door, and they were a big standard company that, you know, they wrote the amusement park there in Utah, which they were a very conservative company, and they normally wouldn't write an amusement park, but that was the art of underwriting. The underwriter, the risk management guy, and the claims guy, a lawyer who managed claims in-house, they didn't outsource claims at that point. They would all decide to write the risk together. So you're all on the same page, right? You have a strategy, you have a play. Now, you know, fast forward to 1986 when I started doing business with Homestead, and I'm dealing with the underwriting department, I talk them into it, and we have a rafting death case, and the claims guys get involved, who's all outsourced. They say, what the hell are we doing writing this shit? Who thought we could make money doing it? So they're helping our opponent at that point because they weren't involved in the decision to write the business. So I do think that's the biggest, you know, gap is we're trying to avoid losses, right? Well, I mean, that's an honorable goal, is to reduce your losses and have zero, but that's not how real life works. Shit happens, right?
Sure.
So, you know, and because somebody's had 5 years of no claims and you think they're a stellar insured, and then they have a really bad accident, even if it's at fault, we kind of like paint them as a worse client now, because what could happen does happen. They're not good anymore. That doesn't make sense to me, right? But when you get so big, like banks and Countrywide Home Loans making bad mortgages, right? Who am I to tell people that? And I remember back in '08 thinking this is a train wreck, right? And I was just a stupid homeowner insurance guy, right? I mean, I'm a homeowner, and I'm looking around thinking, man, this sounds like a lot of big houses.
Sure.
And people get loans that shouldn't get loans. And so I think common sense eventually does show up, but, you know, tricks of the trade and, you know, selling off reinsurance and closing this down. I mean, think back in '08, AIG and the Hartford were broke and deemed too big to fail, and we bailed them out, and they never lost their rating. Does that make sense to anybody? Doesn't make sense
Sure.
to me, right? We all would have been better off had we let them go broke. All that did was push the trouble, right? And that's what we tend to do in our country, is we kick the can down the road thinking that, oh, the problem will be solved at some other point. It's somebody else's problem. I looked at one of the big state wind pool funds, and their reinsurance contract is for 150 years. Why would you have a 150-year contract? And I'm just a stupid guy, but what I assume is the numbers don't work.
Sure.
So you have to push it out that far to be able to explain it to where people say, oh, okay, I guess it works.
Yeah.
No, the fact that you're going out 150 years kind of shows that, you know, the plan is not going to work out anywhere close to what anybody thinks. So I prefer to do simple math, right? And I'll do it with an actuary, I'll do it with an insured. But again, if you have a $5 million house, what should your premium be? Right? An actuary is going to say, well, it's based on a 100-year event, or 250 or 500 or 1,000 years. I guarantee you the big wind pool was 1,000 years, right? Every 1,000 years you're going to have a major event. You know, when the population of our country was a fraction of what it is now, like the last storm in Ian in Florida, that storm took pretty much the same path as a storm in the 1890s. I think it was 1897. And if you go back and look, Tampa Bay in this last storm was just a mud pit. It sucked all the water out, pushed it down to Naples. Oh, like it did this time. Same wind speeds, same stuff. They want to claim it was worse. Well, it's the same. There's just a lot more people 120 years later. I mean, I went down there the first time 10 years ago. There's a lot more people now. So again, if your rates are half of what they should be, and you have slow years and you write twice as much business, when the storm comes, it is gonna kick your ass, because you were situationally unaware of where you really sat.
Sure.
And so again, actuaries tell you how, I say, I don't need to hire an actuary to tell me how to lose my money.
Yeah.
I can do that all by myself, right? What's your rate? I can beat your rate, and I know your actuary gave you those rates.
Sure.
So, you know, if people are focused on, I want cheap insurance because I'm not gonna have a claim, I can't help you. Because all I really do is manage claims, whether they're first party or third party, and that's all any insurance company should be expert at. But I actually do think we're trying to underwrite our way out of claims. That isn't our job.
Sure.
We should embrace the claims our clients are gonna have and be honest with them and say, look, I was telling you guys this story about this trash truck in Miami-Dade with the $5 million limit. So I've now insured him for 5 years over a 12-year period of time. Okay, and $5 million limit, he pays about $32,000 a truck. At renewal, we were suggesting 28, he wanted to go to 25, but I said to him, you know, you're not making this like the good partner, right? You're supposed to do your job, which is have as few claims as possible and help me manage the claims by being proactive. My job is to not overpay claims and perform for you. So I'm gonna go do a little study and I'm gonna call you back tomorrow. So my little study showed that the 8 years out of the 12, he was with other companies, and the 4 years he was with me, our average claim payment was $6,600 per claim. When he's with the other companies, $286,000 per claim.
Wow.
And that's why he comes back to us, right? So we clean him up for a year or two, and his loss run looks good because he doesn't have any big claims. Then he goes and gets a cheaper rate, you know, $2,000 cheaper, 25 grand. Then the claims balloon back up to 285 grand average per claim. So that's the math that he needs to add both of those numbers together. Yeah, we're more on the front end, but we're saving you so much on the back end.
Sure.
And as a good partner, if you don't even want to look at that math, if all you want to look at is I want cheaper insurance, I'm like, well, that's not a good partnership, right?
Sure.
I'm doing my job. I can't really do any better than 6,600 a claim in Miami-Dade. And actually, I can't do it without him helping me, right? He has good drivers. He's got people who show up to be deposed. We don't fire his drivers when they have an accident, which is one of my pet peeves. You know, everybody says, we're gonna fire you if you have, don't hire them. Do
Sure.
not fire somebody because they're involved in an accident, because your driver is a separate insured,
Sure.
right? If he tells us to settle, we're kind of screwed if it's a case we want to fight, because he does have a say. So, you know, don't just, and there's certain cases where you have to fire him, and we can still work through that. But, you know, in the majority of cases, not. With him, he has a community college, they bought a simulator, and they have a 6-month program for new trash truck drivers. And once they come out of that community college with their driving certificate, we let them hire them,
Sure.
right? That's the solution he came up with. I'm not gonna tell him no, right? One of my solutions is put cameras on your trucks, do all that stuff. But if when the claim comes in, we're not gonna use that to win, you've wasted your money. Right? You'd be better off not spending that money. And so everything these insureds do, it has to be looked at like an investment in the future to bring their rate down. But, you know, that takes good partners. And I explain it like a sports team. You know, when we were on the playground as kids and there was a bully, was he as tough as everybody thought he was? I don't think so. Right? And then when we wanted to, what are we playing? Football, soccer, baseball? Did you know who to pick to win?
Sure.
When you were on the play, you knew. You didn't pick the cheapest, slowest kid that wouldn't help you win.
Absolutely.
right? You gotta pick good partners to win, and then you have to be able to execute when you make it to the Super Bowl, right? And a lawsuit isn't as fun as the Super Bowl, but that's a serious crossroads in any business is, you know, are you gonna win? Can you win? And you give up when you can win, and all the lawyers are gonna tell us to settle, and I'd say that to every insured, is, you know, the lawyers are gonna tell us to settle no matter what. And we have to decide where we're gonna fight, and we have to tell them no. And, you know, I know when I'm gonna tell them no, and I'm gonna be asking you to do the same thing, and that's gonna be kind of the crossroads, who you listen to. And if you're gonna listen to a lawyer, you know, I'm risking my own money, right? I don't know any other insurance company president that's risking their own money, right? They're an employee, they get a paycheck.
Sure.
And, you know, as a young kid, I remember telling my dad, you know, we need to start an insurance company because my life was talking to underwriters, asking them to do stuff. Well, the answer is just put up your own money, do whatever you want, right? Why am I wasting my time? And then the other half of my life was talking to lawyers, trying to get them to fight cases. Every case I've won, my own lawyer told me I was gonna lose. Doesn't matter whether it was the Supreme Court in California, the Supreme Court in Michigan, the Katrina case in Mississippi, they always tell me I'm gonna lose. And, you know, you gotta know the facts, you have to feel comfortable. Would a lawyer ever tell you to fight a case? I don't think so. I think that's their job. And, you know, I had a lady just tell us to pay, and I've insured her for 7 years, Cape Hatteras, and they had an accident where a guy died. It wasn't her fault. We should have fought. She went to her local judge, or local lawyer who used to be a judge, and told us to pay. And so I tell her, look, that's not what I think we should do, but we're gonna pay because that's what you want to do. Then next season comes around, she calls up, wants insurance again. I'm like, yeah, you know, the price is what we paid, right? You paid a claim you shouldn't have paid, it's just math, and you're gonna do it again. Oh, I wouldn't do that again. I said, I don't believe you, right? When the chips were down, you made a decision, and that's the decision I think you're gonna make. And she says, no, I understand it now. I didn't understand before, now I know we should have fought that. And she's like, you know, that judge confused me. He was a really good lawyer. He's a judge here. And I'm like, you know what? Judges, they're just lawyers with ropes. They're part of the team, right?
Sure.
They're all in cahoots. And that's, you know, I had a discussion with the commissioner in Louisiana today about that too. And I, you know, basically there, you have to go to the appellate court if you're in state court in 2 counties. Right, because it's so political and it's so, but that's our job, right? You go and you do the right thing, and in many cases, the judge will tip the scale. That's your appealable issue.
Sure.
They gave us what we needed. But, you know, most insurance companies, I could never get a company to appeal a case because they don't want to spend any more money. You know, the claims guy, all the people are doing stuff based on saving money. They'll even call up the insured and say, look, you know, we could fight this. It's gonna cost us 200,000. We can get out for 180. We're gonna save 20 grand. I hate it when they do that. It's like, so is that your job, to talk us into taking the cheap route out, even when we're right? You know, if they're right, we should have already paid the 180 grand.
Sure.
We should have just cut them off at the pass and paid them up front, and the lawyers wouldn't have made all the money. So, you know, in Louisiana, I hire a lot of plaintiffs' lawyers. And again, when you're playing the game and you're a plaintiff's lawyer, you know, you sue somebody, you can probably know who their company is, right? With trucks, you can look it up on the federal website. Mm-hmm. Other stuff you can't, but you get a copy. When you sue them, you just demand a copy of the policy. And then they want to see what lawyer the insurance company hires, because they all know each other. Can you imagine the phone call? Say, hey, Bob, Bob, yeah, I see they assigned you this case, so, you know, what's our plan? What are they telling you?
Sure.
Right? Where do you see this case going? And they're talking settlement, right? And I want them to tell, you know, on good cases where it's frivolous, I want them to say, so you ever heard of Prime or Rick Lindsey? Because he is a maniac. He will spend more money to win than you think, right? And that messes with their game, because now their deal of trying to jack up the price to give you, you know, it's just like charging somebody with a felony and then allowing them the misdemeanor, you know, you can plead guilty. And most people take it because they were scared shitless that they were, you're giving me a door out, thank you. You know,
Take the
when
deal.
I got arrested, I didn't take the deal.
Yep, me
I
neither.
sued them and won. You know, and every lawyer in Chicago told me you can't sue, and I'm like, no, you can, and we're going to.
Yeah.
And we did, and they were found guilty of wrongful arrest, and they paid me $200,000, but it cost me $380,000.
Yeah, but it's worth it. You get to tell the story now.
Yeah, well, and my reputation is worth, I would have spent $1 million.
Sure,
You know,
absolutely.
same with the state of Mississippi suing us 14 years after Katrina, past the statute of limitation. You know, again, the plaintiff's lawyers are figuring out how to work at all angles and come at you. And again, I'm the only insurance company that didn't settle with them. And I told everybody else, I said, you know, if you pay them, they're gonna do this after every storm.
Sure.
And that's a dead
You're
end.
setting the standard.
Yeah, you know, that's a dead end for our industry, because now we can't have regular math. We gotta live on their nuclear verdict and social engineering threats, which, you know, again, I think those are labels of, you know, us not doing our job.
Sure.
Well, why is it so bad? Nuclear verdicts and social engineering. I'm like, those sound like made-up terms to me.
Absolutely. So maybe we can discuss some of the unique risks that Prime Insurance covers, and how do you assess and manage those types of risks? I know you mentioned, you know, rock climbing and that sort of thing, and a lot of the stuff you see in Florida, from what I understand, flood rates are just extremely outrageous there. Maybe we can dive into that a little bit.
Yeah, again, I think you have to underwrite, right? You can't do it from an application, you can't do it from a piece of paper. So, you know, the easiest thing I ever underwrote was the Rolling Stones concert, where Lloyd's declined it and they couldn't get COVID and cancellation and death coverage. And so I said, you know, I need to talk to Mick and Keith. So I talked with them and had a Zoom call and, you know, asked them why they want to do another tour, and, you know, are you healthy and can you do it? And then you craft an approach. And, you know, they wanted, if local community said, you know, you can't have more than 50% capacity, because you remember at events, they were like limiting how many people you could have in. And, you know, I basically said, they wanted 75, and I said, well, I'll do 50. So, you know, if they'll still let you have the concert with 50% of capacity, you have to do it. And they wanted 75, and they could cancel and still get paid. So, you know, there's terms and things like that that would have pushed the price up had I let them do it. And so it's a lot of, again, partnership negotiation and figuring out, if a claim happens, how do we make you happy? Because I don't want, you know, there to be litigation, right? That's what's making us, the industry, the bad guys. And then the number of events that got canceled, and then, you know, I was struggling with the rate. I could have hired 15 actuaries, and they'd have given me 15 different prices. So, you know, I just kept working on it to where I would have felt comfortable. And then they came at me and said, look, we'll just pay you 3% of the gate, right? Which was $3 million for a $10 million limit. And like, well, that doesn't sound bad. So, I mean, again, I know that before COVID, Lloyd sold the crap out of this cancellation coverage, and, you know, it would probably have been like 70 grand or something. It was for 20 million, for twice the limit. And, you know, the Stones had a prior claim with London that wasn't covered, and they ended up suing them. And then London paid when they shouldn't have paid. And that was the point I wanted to make to them, is look, if you're gonna expect me to pay for somebody that's not listed, that won't happen. So if you want me to pay, you need to list them. And, you know, that was kind of a fundamental deal too, because they'd already had a problem with London, and that's what sent it to me. So, you know, they wanted me to issue it, the policy for 0 premium, 3% of the gate. And I said, you can't do that, right? There's gotta be a premium, I gotta pay the tax, and then we can audit it. So I'll do it for the gate deal, but there's a $2 million minimum premium, and then we'll audit at the end. And so it ended up being that. But, you know, again, it's you don't run to some book, and what's this and what's that. You know, I think that common sense says it really should be like other businesses, right? You watch Shark Tank, everybody watches Shark Tank. What business do you go into trying to charge as little as you can?
Sure.
And then every year you gotta bump the rate because you got it wrong, right? My approach is more, let's make sure we can give them a credit at renewal for being a good partner. So you're basically playing the game the opposite way of everybody else.
Sure.
And again, if the worst happens, you can stick with them too, because you weren't, you know, a dumbass going in the beginning because you wanted to beat the other guy's price.
Yeah.
And, you know, if you're better, you can't compete with stupid, cheap price.
Sure.
And that's what I tell people. I'm like, look, it's a decision. You want cheap? I'll tell you where to go. If you're never gonna have a claim, that's where you should go. But if you want good insurance and a good partner who'll stick with you through thick and thin, then I'm your guy, right? And even if you change directions on me, right? If you wanna pay some claim I don't wanna pay, I'm not gonna cancel you, but it is gonna change the math, right? And if I screw up, right, if at renewal you say, Rick, you overpaid that claim, and I did, I'll take my lump. I won't make you pay more for that, right? That's what a relationship would be like. And, you know, I go back to when I was a young kid trying to get bank loans and stuff, and, you know, you want somebody to believe in you, right? It doesn't matter, you know, you'd get denied on some loan, and you'd say, oh, so you're the loan officer, huh? So who declined? Well, the committee. So can I talk to the committee? No, you can't talk to the committee. You know, there's like, they're the Wizard of Oz. They're
Sure.
hiding behind the door. And my own personal opinion is, in our business, you know, I get deposed a lot. And that's part of my job, right? Most people don't want to be deposed. And lawyers use that as another, you know, weak point or wound to press on. And you tell somebody they're gonna be deposed, and it's like, okay, just settle that case, right? No, I'm gonna be deposed, and I expect my insureds to be deposed too when we're right. You have to show up, right? If you won't show up, and that is the biggest wild card. Everybody talks a good story when they're upset and they're underwriting, and then when stuff happens, we're gonna find out at some point whether you're really gonna stand up to the bully on the playground or not, and use the legal system as a justice system by going to court. Don't be afraid of going to court. That's where you can win. You should really be afraid of what's going on now, which is you're just settling yourself into trouble, and you're making lawyers all the money.
Sure.
And again, I like doing stuff inside. The old insurance business had in-house lawyers. That's why you were an insurance company, right? And then at some point in the 60s, 70s, 80s, outsourcing, because like, why do we have all these lawyers? We could outsource it, you know, we hire them anyway. Let's just outsource to them. And it sounds good, but it's not good. You're giving away the controls. And I always say, it's like, you know, I don't want a lawyer flying the plane. He's a passenger, and he helps us where we need him, but he's not the pilot flying the plane, and that's what it's become. We just hire a lawyer and let them fly the plane, and guess what? It crashes every time.
Yeah.
So you were telling us earlier that Prime has the ability to, you put in a request, or the clients can put in a request to change vehicles or drivers or something like that.
Right.
What other technology do you see coming out that you are looking forward to?
Well, I mean, you know, I'm not a big fan of InsurTech. I think that over the years, you know, people are creating what I like to call cans of corn, right? It's like an MGA system or an agency system, and, you know, it's gonna be the best one ever, and there's probably 20 out there that an MGA could buy or an agency could buy. And, you know, the one I looked at many years ago when I decided to just evolve my own system was Duck Creek. They were the big, you know, hot one at that time, and they've been bought or sold probably 10 times by now. So, again, I do all my IT in-house, and I think that, you know, you don't want to be the first one buying the latest, greatest thing. It's like cameras in trucks, right? There's, I don't know how many, 20? And, you know, I just as soon support the operator. I'm not gonna tell you, hey, you buy this camera, I'll give you a better rate. It's like, that could change next week. They could go out of business, they could merge. So that's really not my job, right? My job is to work with you to manage claims. I think you should have whatever technology you think you should have. And same with hiring. I really don't wanna tell you to hire, that's your job, right? Hire good people that you don't have to fire if there's an accident, because that is a really big issue, and the plaintiff's lawyers know it. They're looking for that immediately. They want to know if the driver's still there, can they depose them, and all of those little subtleties are important turns in the road. You know, cameras are the best technology, and I started using those in 1986 at skating rinks, right? You put up a camera, and somebody falls, and they say, you know, somebody knocked me over. Well, the camera shows you just fell, and the lawsuits go away.
Sure.
Obviously, when somebody did knock them over, it shows that, and again, head them off at the pass. Take care of your customers. Make a happy customer. Water parks, you know, parents drop their kids there off, and kids are playing, and they get hurt, and you kind of ignore small injuries, and eventually you become like the most hated place in the neighborhood, and lawyers start to feed off you. Same with trampoline parks. Shit's gonna happen. So how about we have a plan that as people get hurt, you take care of them. You take them in and you baby them, and if they need to go to the hospital, you take them to the hospital, and you document the injuries. And then you basically say, look, we're here, we want to do what's right. This is, you know, this is our family. If we did something wrong, we want to know it, we want to fix it. But we kind of think this is just, you know, an accident, she slipped, what are your out of pockets? And that's where we always start, is if there's a potential claimant that's taking money out of their pocket because their dad died, and they're paying the coroner, and they're paying for a funeral, that's where you need to be, Johnny, on the spot, helping them and giving them a road to you, not being like, well, where are these guys? You know, who are these guys? Or, you know, my daughter got hurt at the trampoline park, they don't even care. So if there was no such thing as insurance, that's what they would do. The businesses that survive would do the right thing. And again, when they buy insurance, they kind of go all goofy. It's like, well, my insurance company's handling that. Oh,
Not my money.
not really.
Sure.
You know, you better make sure they're actually stepping up and handling it. But again, when you get some customer, you, the business owner, should call them, right? It shouldn't be me from the insurance company. Say, yeah, I'm with ABC Insurance Company. We heard you had an accident at the trampoline park. That's not what they want to hear. They want to hear from the owner of the business. Call up and say, hey, I'm, you know, sorry that your daughter was hurt at our trampoline park. This is what we have. We have the video if you want to watch it. You know, we want to be transparent, and if there's something we have to change, we want to do it, and then we want to make you whole. So,
Sure.
you know, and that's all most people want. Most people hate lawyers, but you push them away to the point where they hate you more, and they will go get a lawyer.
Sure.
So, just manage your business, and that's what we try and get people to do with our partnership approach. And, the app we have on our phone is really to make, I think, real InsurTech, right? So once we insure somebody, I get pulled over, I don't have my ID card, right on my phone. I pull up my app, if I can't get it, I can text the service department and they'll text me a certificate, right? If I need to change a driver in auto, I do it right on the app. It goes right to the service department. Even if we don't respond, it's covered because you reported it, right? Again, I told you earlier that, some of the classes of business, tow trucks is particularly tough because they quote each truck separately, right? And so the producers will tell the guy, well, don't send it to them, send it to me and let me see if we can get you a cheaper quote through Progressive. Well, during that quoting time, that truck's out there driving around, right? So to me, that's the opposite of InsurTech, right? One system where it's seamless, the insured gets what he wants, and I know that, in a lot of times we insure trucks and they'll buy a new truck that's more valued. We'll send the quote back and it goes to the retailer from the wholesaler, and then the insured says, well, that's more. I don't want to pay more. It's like, well, the truck's worth more, right? The premium went up. Well, no, go back to them. And so then there's this, discussion as to whether that's the best price or not, right? And during that time, stuff happens. So, once you insure somebody, everything should be very simple and easy. It shouldn't be this delayed service process that takes the agent putting it in his system, sending it to the wholesaler who puts it in their system, sends it to the company who quotes it and sends it back. I mean, that's all a bunch of, that doesn't sound like InsurTech to me. That sounds
Sure.
like cowboy days.
Yeah.
We could go Pony Express and it would be faster.
Absolutely.
So, again, we're always looking at all the stuff. I have my own IT department with 15 guys, and again, when regulators come in, reinsurers, auditors, our system has everything in there, right? I can print you anything you want on any producer, any class of business, any state, and it's been in there since 1986, and it's just rolled forward, and we've obviously updated it and switched over, but we're not jumping out in front thinking there's some technology that's going to change the world, because I don't believe it. I think it's really about doing the hard work. I was watching golf over the weekend, and everybody talks about data, and they said, in golf, once you kind of lose the art and you focus on data too much, you go nuts. Because data is like partial picture information, but you still have to go execute.
Sure.
You still have to hit the shot, you still have to hit the putt. And all the data in the world, at some point, becomes less useful to you because you're over-focused on it and you're missing the
Human element.
the human element, yeah.
That's something we've seen. We've seen some, some of these companies try to branch out to where they skip the agent, or in your case, skip the underwriter having a phone call with the client, and then just going direct to the client. And then you start to realize is that client who couldn't get a quote from any agent out there goes through and maybe enters something that's not correct.
Right.
And you don't have anybody sitting there like, well, this doesn't really add up. The computer just does what it's told essentially. Right. And then you've got the wrong rate out there on somebody. And I think some of those programs have actually failed in the past that try to go direct to the consumer and cut out somebody making a decision.
The problem with going direct is it'd be like being a banana salesman and not worrying about what bananas are going for.
Sure.
Right? It's a market. And
Yeah.
so, as I told you, if I issue a $10 million quote, I go to the market every time. My underwriters don't want to, because they're like, we can just issue it. I'm like, yeah, but, you know, if Gen Re or one of the big markets wants 2x of 2, and they'll do it at a very aggressive rate, we actually need to know that for our client,
Sure.
right? And like in Florida, there's a commercial auto writer called Granada, right? I want you to go get quotes from them. They're not rated, right? They don't make money. And so that to me is the choice the insured has to make, and that's that, you know, the agent or broker should just present options and then support your client. Say, okay, you want to go with them, you know, that's not what I'm recommending, right? I would spend more money to go with a better proven market, but you know, that's the agent's job, is to present options. And that's, you know, I was with State Farm Insurance for a long time, and the lady that insured me in Utah, she was a lawyer. She went to law school and then became a State Farm agent. I never understand how as a captive agent you represent your client, because you only have the one product, right? That's not good, because there's certain things State Farm won't cover.
Sure.
And so as a producer, what do? You jam it in there and you force it, or you tell people stuff that's not true, because you don't have the answer. So again, you know, if there's a great market for physical damage standalone, we ought to all know that. And if it's a good market, A-rated, we ought to use it, right? And I'll just write the liability.
Sure.
Right? A lot of people said, oh, if I'm doing the liability, I go and do the physical damage. And that's really big in the aircraft world, because there's no premium in the liability, right? It's all in the hull. So most people say, I'll insure your aircraft, but I want to do both. I'm just the opposite, right? I'll do the liability alone, because I think you're going to preserve yourself, right? The hull coverage is so cheap in the aircraft world, and really the big boat world, that I just soon not write it, right? Because when you have the claims and you have to run away from it because you're not getting enough premium, that's as I said earlier, like California homeowners, you know, Pure, all these big guys that have taken, you know, high-end homeowners money in California for 50 years, they're all running away. Well, forest fires have been going on forever. That's not new. They may be worse, but the bigger problem is there's more value, and you were never getting the right rate to begin with. And, you know, luckily there hasn't been a big earthquake in California, because that would be like a big storm in Florida. The market in California would even be worse. And, you know, as insurance industry, you know, there's black swan events. Those are the things that, you know, nobody plans for. Oh, kind of like insurance, right? Big storm, big forest fires, and that's what we should be expert at, right? We should be prepared to live through those tough times and make happy customers, not be surprised, kind of like the banking industry in '08, right? They took us all down this road, it was all gonna be fine, and then when it doesn't work out, they don't even accept responsibility. We gotta bail them all out. So, you know, being cheap and taking people's money for a long period of time, and then when what could happen does happen, you drop your weapons and run for the hills. That's why people don't like insurance. Even if you don't eventually want to write, how about doing your job, right? Giving the people a path forward and saying, look, you know, we got to increase your rates. That's what I would do, right? I'd just say, look, we got it wrong, right? In the trucking world, if you had 10 accidents a year and now you're having 20, the math changes. Sure. You know, what are we paying average per claim? So again, this is all really simple math to me. It's not rocket science. Even the legal part of it, you know, there's things I've learned, and I learned them the hard way, right? Because I learned that I was right, and I should have stuck to my guns, but we paid a claim that we shouldn't have, or, we could have won, and we have won a lot. So, you know, not listening to the so-called experts. I mean, the people that we insure, they're experts, right? They know what they know, and what we should do is tell them what they don't know, right? This is what a claim looks like. This is what has to happen. You have to report it immediately. I always talk about, you know, when you hire a lawyer on retainer, you write them a check, and then you'll call them, right? Bob, you know, you'll call the lawyer you paid a retainer to. When you pay an insurance company premium, why don't you want to call them when stuff happens?
Sure.
I mean, that to me shows the obvious gap between expectations. It's like we're guaranteeing our marriage is going to end up in divorce because we don't have the foundation set to actually, you know, again, one of my favorite statements now is, you know, everybody's trying to screw the other guy. Insurance companies are trying to take your money and not have to pay the claim. And, you know, I had a big grocery store guy tell me, and we just wrote all of his insurance down in South Florida. He says, I actually thought my job was to try and screw the insurance company.
Sure.
Right? I'm supposed to maximize the payment. That's,
Sure.
You know, they're excluding this and not doing that, and it's all trickery. So I thought that was my game. And I'm like, how about we quit trying to screw each other and become partners and actually execute, you know, fixing the building instead of, I don't want to pay the flood, right? I
Sure.
want to give you the flood, and that means we have to do the math right. So to me, it is all just math. It's real simple. We don't need to listen to overeducated actuaries, lawyers. You know, they're all smarter than us, but they won't risk their own money. You know,
Sure.
the insureds are risking their own money. They want to form captives. They're paying more premium, and I'm risking my own money. So that normally means you got a good opportunity for a good partnership when you're on the same page and
Absolutely.
you're both in the same boat.
You're less likely to throw money at the problem when it's your money that's getting spent.
Right, or spend it in the smart way.
Sure.
You know, 3 years ago in Florida, the storms, you know, people patched up their old property that, you know, and they could have done things better, right? Your elevator floods, your air conditioners go underwater, and so you replace them. Right? Well, did you move them up? So in the next storm, you don't have that same claim?
Sure.
No, why would we do that? That would have cost us more money. Well, in the short run, you know, you're saving money, but in the long run, you're just wasting money.
Sure.
And that's because you're really not working together to improve the risk. You're trying to take advantage of people you want to call your partner. And, you know, you can't be partners with people when you have an adversarial relationship. You actually do need to understand the game, agree to it, and be willing to execute. And most of the people I meet today are very professional, very in tune. They want to do the right thing. And I believe they think they're going to do the right thing. And then when the chips are down and the heat is on and the lawyers are poking at your wounds, the more I can be a fortune teller and tell them what's going to happen, this is going to happen, this is what you're going to have to do, the more comfort they get from that. And if people have been through it a lot, which most insurance companies think if you've had a lot of claims, you're a bad insured. I actually think the opposite. Right? The guy who's never been sued and thinks he's never going to have a claim, he's naive and he will be abused by the legal system. The people who have been beat up and now get religion and form a good partnership, they will be smarter than the guy who's never had a claim. And that's just because you're more familiar with your surroundings. You can't be intimidated by the bully on the playground. So it's, you know, this is the biggest market, insurance market in the world. That's why everybody wants to come there. You know, the Japanese, Sampo, Tokyo Fire and Marine, they now own Philadelphia and HCC. And so I think it's funny that, you know, after the tsunami and the meltdown of the nuclear power plant in Georgia, all the Japanese guys came over here and started writing insurance. Wonder why? Well, because that's how they're paying all their claims. They're taking premiums, right? You know, they're coming to the biggest market in the world. Same with Lloyd's. I mean, they write, I think Mr. Commissioner Donald told me that Mississippi is Lloyd's sixth biggest market, bigger than Germany,
Oh, my
bigger than,
goodness.
you know, countries. And so, you know, it is a marketplace. Everybody wants to be here in the US, but, you know, they don't want to write flood. They don't want to write earthquake. And people who do want to write it as a separate line, which again, I think, even if you want to do that as an insurance company, I should do that through reinsurance, right? You should have one policy, and if I don't want to write earthquake or flood, I can do that behind the scenes, and it's transparent to you. You don't know. But when I make you buy multiple policies from separate people, that is a recipe for disaster, and it's a gold mine for lawyers. Because where does one start? Where does the other one stop?
That makes sense.
You know, why don't they just reinsure it? Why do they form these separate entities? That to me, again, if we were figuring it out, we would be going in the other direction. And I do look at it like, you know, they are too big to fail because they're too stupid to do it right. I mean, it wouldn't be hard for all the big guys to just embrace it and do it the right way.
Sure.
They got way, you know, more than we do. And again, all these big brokers in London, you know, they placed $30 billion in reinsurance, and they don't want to form an insurance company. I mean, if they want to actually help provide a solution, they ought to step up and start taking some risk, right? Because the capacity's gone. They say they can't get it. You know, people, $50 million house or $100 million house, they have a cap of 50 million. You know, big property schedules in Florida, 800 million, they have a cap of 50 or 100 million. That doesn't really work. You're basically self-insured.
Sure.
Right? Is what you're getting a little layer of coverage. You know, those are things that I think show that we're moving in the direction we've always been moving in, which is to move away from trouble and make them do that separately. And that's going to grow the litigation system and isn't going to help us be any more friendly to our clients. So, but we're doing it, and that's the opportunity. You know, I'm glad that I had the vision, you know, that I was just a madman. I knew I had to get my own insurance company.
Yeah.
Then I wouldn't have to talk to underwriters anymore, and I wouldn't have to, well, I still have to talk to lawyers, but they do have to listen
Sure.
to me now, where before they didn't. But
What age were you when you said you had that vision?
Well, it was, I mean, from the time I was 21 till I was 27, I was on a campaign to do it with my dad and his partners, and they, like most people, they didn't want to take any risk.
Sure.
Right? They just wanted to be an agent or broker, have as few employees as possible, you know, don't want to get too big. And I told them, I said, you know, I don't care how many employees I have, you know, I want to be a risk taker because I actually think we can do this, right? We can actually represent people better and fight better if we use the legal system as a justice system.
Sure.
And, you know, now I'm even more dangerous because I know it.
Yeah, absolutely.
Right? It's been proven now. So to me, I think it would be, you know, really good if, as an industry, we stopped, you know, like World Trade Center, you know, terrorism, active shooter, all of that stuff, bead, you know, we can't do that. Oh, so we think the government can do it? I don't know anything that the government can do better.
Sure.
Right, and so, you know, when it comes down to it, the guy that owns the World Trade Center, he can't afford insurance. He owns the World Trade Center.
Yeah.
Right, and if he can't afford insurance, why should we as the government and the make insurance affordable for him.
Sure.
If you can't afford the insurance, sell it to somebody who can.
Mm-hmm.
It's just like your kid coming home with a Ferrari and you say, dude, I don't think you can afford that. Oh, no, I think I can. It's like, well, can you afford the insurance?
Sure.
Well, that's a problem.
I'm just gonna add it to yours. That's good. Well, I appreciate you coming in and being on the podcast with us. A lot of good information here. You got any?
No, I mean, I started placing with you guys, I think it was last month. We was able to place one a little over $300,000. And I have to say, the experience was great, dealing with Hassan and Cody on it. And the insured loved it. The conversation was, just like you said, it was a relationship-based conversation. And the insured came away feeling really great about it. So we're happy to get that done.
You know, what's funny, I think Colton placed one and the insured was actually an attorney.
Well, I do a lot of good lawyers, and again, if the lawyers actually believe us, I think they know it works too, right?
Yeah.
They get it. All of these high-end homeowners I'm dealing with, you know, their agents and brokers, or their agent, you know, the famous person's agent and their lawyer say, you don't need to talk to so-and-so. I'm like, no, I actually do, and if they want to talk to me, then I don't want to insure them, because that's a red flag for me.
Mm-hmm.
You're too important to talk to me. You know, I'm
Sure.
pretty important too.
Yeah.
The fact that I'm on the phone ready to talk to you shows you're important to me, and you not showing up.
Sure.
You know, this one yesterday, he races his $1 million Ferraris, and K&K canceled him. He can't get it. So I tell my underwriter, you know, get the decision maker on the phone. And so he gets the decision maker on the phone. And I'm like, so who are you? And she says, well, I'm the president of the company. I've worked here for 9 months. And Mr. Roy is really busy. And I'm like, okay, so you expect me to believe you're the decision maker and you've worked there for 9 months. So if he kills somebody on the track and gets sued, you're making the decision? I said, I don't believe you.
Yeah.
You've only worked there 9 months. Right? So again, people who want to hide behind the curtain of somebody else and say that, you know, they're the decision maker, and I get them all the time, and I just tell them, look, if they don't want to talk to me, just be honest. Say, you know, they don't want to talk to you. I'm the guy who's going to manage this, and if I give you a quote, it's going to be higher.
Sure.
Because that's a red flag.
Absolutely.
Right? The guys that we talked to that liked our approach, that's why we do it, is because most people, and even these wealthy people's agents, the one guy said, you know, this is the first insurance call in 20 years I've ever had that made sense. And it was the math story. You got a $30 million house, what do you expect the premium to be? The problem is their old rates are what they're focused on.
Sure.
If you had a $5 million house and you paid $7,000, right, excluded earthquake, $500,000 wildfire, you know, all of these limitations that push more of the risk onto you, and you're not doing the proper math there of what your self-insured real limit is. So I can strike a deal with you and give you a percentage and put you in a better spot. And, you know, again, depending on how much risk they take, some of these people take 50%. And again, this idea came to me by accident. I was on the phone with one guy, and his house is worth $30 million, famous guy. I give him the price. He says, I only want $15 million. Well, that means he wants to pay half the price.
Yeah.
I'm like, okay, we can do that.
Yeah.
But it's 50-50 share now. And I mean, literally, it dawned on me right there that the way to do this is let him take 50% of the risk. And that was probably 2 years ago now. And now Berkshire Hathaway will give us up to $100 billion support on any, you know, structure based on that risk sharing idea. And I know they're going to try and steal it from me. And I tell them I don't care. Right? All the stuff I'm doing, I think every insurance company should do, and it would make all boats rise
Sure.
in a rising tide. Right? So again, I think most of them are, you know, too big and too slow, to make good decisions, and that's why Prime's unique. So when you guys call, you know, everybody says, oh, you know, it's a week renewal, we don't have time. I'm like, I can quote anything in one day, right? You just get me a complete submission.
Actually, this one I turned around within 24 hours.
It was less
Cody.
than that. It was probably 4 or 5 hours, I think, that you did. We had went to lunch and got a phone call after lunch. He submitted it to Cody, and we were having it buttoned up right before we left at 5 o'clock. It was a very fast turnaround. Now, we don't want to do every one that way to give you guys.
Well, and again, you know, when the market is in turmoil like it is right now, that's when your best opportunities are gonna show up. And everybody else thinks you can't execute that quick, right? I had one deal with a big broker on Saturday, and he's like, you can't do it. I might get the guy on the phone right now. We'll have a call and I'll give you a quote, right? I hate when people say they can't do stuff.
Sure.
Right? We have other people who, you know, oh, I'm in Dubai, I can't sign that, bind it for me. I'm like, dude, they have fax machines, you can sign it on your phone.
Sure.
Right? Don't give me an excuse that you want me to bind something and wait a week because you're on vacation. If I'm on vacation, you'll never know it. And I tell my employees, do not tell people when you're on vacation. They don't give a shit.
Yeah.
They want their truck changed, or they want to report a claim. And, you know, you said, I'm on the beach for 2 weeks in, you know, Mexico. That's not what I want to hear.
Yeah.
You know,
Can this
good.
wait?
I'm glad you're on the beach in Mexico. I don't need to know that, right?
Sure.
If you don't answer your phone, have Cody answer it and take care of me. And that will save. I mean, I've shown my own staff, when you don't answer your phone, do you know how many ping pong things that takes now?
Sure.
And, you know, after hours calls, you know, everybody wants to outsource it. And I'm like, so when we outsource that, what do? They take a message.
Yeah.
And they send
Send
it
it
to
back.
you to deal with anyway. How about we just answer our phone and deal with it, right? Because if it's 12 midnight on Sunday, I'm pretty sure it's an accident. And, you know, there's not a lot you can do except answer the phone and get things rolling. And when you don't answer your phone, people's minds go, you know, they start spinning out of control, especially when they're in trouble. So I'm a fanatic about answering my phone, and everybody knows that we have a tree, right? And so if it's a claim call or an underwrite call, comes in and people are supposed to answer it. Well, if they don't, guess who it gets to? Me.
Big Daddy.
Yeah. And, you know, I get calls all the time from people because I give them my number, you know, at every call, or those call sheets, they have my direct dial number. And that's the way I put pressure on my own employees too. Right? If you know they can call me, right, you're sitting there thinking, oh, like I've been there before. Right? I didn't return that call. They called Rick, and you know, then I should have returned the call. And so, and I tell people, look, I want to know, right? That's how you fix stuff.
Sure.
Is people have access to you, and then you can take care of it. You think you're so important and remove yourself and make, you know, really, I think it's throwing your employees under the bus. Right? I could tell them, my CFO makes all the decisions. You have that call. Then my CFO would, you know, he'd come ask me anyway.
Yeah.
So
Absolutely.
I do think there is a decision maker. A lot of them don't want to deal with stuff that they don't like, and so they appoint somebody. And again, dealing with them is going to be different than dealing with the decision maker. You have a great call with the appointed golden person he bestowed power on, and then you're in a heated situation with some frivolous lawsuit, and now I'm talking to you, trying to convince you that, you know, I kind of know what I'm doing, and are you going to listen? And now I'm talking to you the first time under pressure, right? If I talked to you before and I establish a relationship, it's probably going to be a much better outcome when the pressure's on. So that's, you know, we've taken a lot of heat for that requirement over the years. Most people don't like it. I think it's the best thing for you. when you can bring an underwriter to the table who can make sense and impress people and establish that relationship, that's what you need with tougher accounts. If it's an easy account, everybody will write it, then yeah, you probably don't need to do that. But I've never done anything easy. It's all the tougher stuff. So, but I appreciate you guys, you know, I think it's fantastic that we're doing business. I would tell you that, you know, the sky's the limit, right? Your personal lines guy, the homeowners, the true umbrella, on the trucking, you know, in some cases, we may just be a good excess market for you. And in many cases now where there's another primary carrier, they now hire me as the claims manager because we're on the excess. And they're hiring Gallagher or Sedgwick, and I'm like, look, I'm writing 10X a year one.
Sure.
I have skin in the game. You should assign me the claims, and why wouldn't you?
Yeah.
I get better results than those guys do. So it's, you know, I think the market's gonna be hard for the next 10 years. You know, most insurance cycles have been 6 months. If you go back to the 80s or every storm pattern, you know, it's kind of hard. And then a bunch of money comes in and we go right back to the same, you know, soft market. And you're just waiting for the next storms to blow those companies away. You know, there's not a lot of new money coming in now. I think the hedge funds were the last pile of money. When you put money in an insurance company, it's trapped by the regulator, and that's what makes it difficult. You know, you can go raise money to buy brokerages easy, because you can sell them and get your money out. When you start an insurance company, money goes in there, it doesn't come out without the insurance department's approval.
Gotcha.
So that's what investors, I remember years ago, I was trying to raise money and I asked the head of KPMG, I'm like, why is it so hard? All these silicone guys and, you know, they get money thrown at them all the time. She's like, yeah, well, the insurance business, it's trapped money. That's what investors refer to it as. So we, you know, when you make money as an insurance company, obviously your reserves grow and you can pay the tough years, like the storm years. You know, if you're a homeowners company in Florida, in non-storm years, your loss ratio, combined ratio should be below 50. Because in the bad years, it's going above 100. If you're at 95, 98 in non-storm years, it's obvious you're gonna go bankrupt when the storm hits. And to me, it's just ridiculous that people don't know that or look at it. But, you know, I have the AM Best book on my desk in every office, on the plane, and I use that as my Bible. You know, I pull it out and I look at the companies and then I look at the quotes, and if it's a good, strong company, I would say buy it, you know. But in Florida, a good, strong company that writes homeowners wouldn't be at 98 in non-storm years. So, you know, the data is there. When people say, I didn't know, I'm like, well, it's right there.
Yeah.
That's how I started. I was calling presidents of AM. I said, I want to be in this book. I want to be in all 50 states, because as I was trying to find markets, even if they're in all 50 states, they won't write in all 50 states, like Louisiana or Texas, and they all have their reason. Their reason is they lost money. Yeah, we used to write in Texas, you can't make money there. You know, yeah, we used to write in North, you can't make money there. If you form the right partnerships, know how to execute and get the right premium, you know, with those three things, you can make money. But if you can't get the right premium, even with the other two, you can't make money.
Sure.
So,
What kind of jet do you have?
it's a Falcon 900 EZ, so I bought it to go to London. And, I bought it right before COVID to go to London, so we're still trying to make our first trip there.
Oh, nice. We can cut that on the podcast too. I was just
No,
curious.
that's okay. That's okay. I had a Phenom 300 first, which was brand new and nice plane. This is a used plane. It's actually Michael Bloomberg's first Falcon 900.
Oh, wow.
I sold the Phenom 300 because two planes was too hard, too much logistics and all the stuff. And like this trip today, I've been in 3 cities today. You know, I can hit 3 cities a day, and it's better than any fixed office now. You know, with COVID, you have to go see people and show up. Travel and commercial now, you know, 3 cities in one day is not possible.
Not at all.
You probably can't make it to one city.
Unless it's a layover.
Yeah.
You can make the layover and the cancellation of that next flight.
Sure.
So,
Yeah, that's awesome. Do you fly most days of the week, or?
no, we fly over 500 hours a year.
Wow.
And then like in Florida, I fly the helicopter around there. I was in West Palm, Miami, Sarasota, and Naples, all in 2 days. So,
Wow.
I mean, in Florida, the helicopter's way better than the plane, just because the plane routing and getting clearance and getting in line, and the airports over there are real busy. In a helicopter, you just zoom in and zoom out.
Yeah.
You know?
Pretty much land where you want when you're in the helicopter.
Yeah.
Colton showed me some videos of your helicopter. That looks like a lot of fun.
Yeah, I mean, you can land anywhere you have permission.
Yeah, that's right.
That's the key. Most people don't know that, and like in the office in Salt Lake, I land all the time, and I've been doing it for 25 years. I got a complaint last week, and you know, it's somebody who's taking flight lessons or something, and they think they know the rules, and say, he's flying low level, that's breaking the law. And
According to the
so
book.
they called me up, and you know, I can always tell Mrs. Jones with the FAA, we have a complaint. And she says, what are you doing? I'm like, I was landing. And she's like, okay, that's all I needed to know.
I saw a video of you driving a four-wheeler. I was like, man, that looks like a lot of fun. I saw you had a helicopter attached to it.
All right. Well, we do, I mean, the snowmobiling and the ATV rides are, you know, I think the funnest things we do. Obviously skiing, you know, is something, but a lot of people don't ski. But snowmobiling and the ATVs are something we do a lot. We should get you guys out to Utah. We got a place for you to stay. And
Don't twist her arm.
Got that on recording, by the way.
good, good. Well, and we should probably, you know, like golfers, we should do a golf trip.
Sure.
And then we should do a trip in Utah that's more variety stuff.
What premium do we need to hit in order to be eligible for this?
Yeah, you guys are good enough, and we'll do it. You know, again, when you find good people to work with and you start doing it, to me, it's just about leveraging that relationship, getting to know everybody more. And the more you know about us, I think the more empowered you can become, and the better we feel about you as producers. Because again, good producers are like a dream to work with. They help the process, they understand it. And you know, the other guys that don't tell you the whole truth, or you know, we're trying to kind of. And again, if you want to separate, you know, just tell me, right? Don't separate a company into two, and then not tell us about it, and then we find out anyway. So, and you know, there's a lot of tricks that agents and producers have learned over the years. And again, I think most of them think that's their job, just like insurance. My job is to get the cheapest premium and then maximize my claim. And so, you know, the insurance companies are trying to obviously counter that with stuff. And to me, if you do your job right and you actually underwrite, which means you know who your customer is, it's not on a piece of paper, right? And if it's a property, you actually go see it and you look at it. You say, oh, the roof's old, what are we gonna do about that? Right? Because that's gonna be different than a brand new roof. if we insure the building next door. So you actually have to talk forward to the claim. And, you know, in Florida right now, one of my pilots, his house was condemned. And it's become clear to me that we need to be even more detailed and say, look, you have an old house, right, that at some point will be condemned, right? 3 years ago, they didn't condemn it. They let him patch it up and fix it. Now this time it's condemned. So his flood policy, which was a $200,000 flood policy, offered him like $106,000. And you know, it's condemned. It's like a totaled car to me. The homeowner's carrier offered, it's $400,000 on the home. They offered him $12,000. I'm like, you know, it's condemned. What are you gonna do with $12,000, right? So again, I would tell people going forward, I wouldn't have before this, I would have said, look, number one, if they don't condemn it, we're gonna spend money fixing this place. And then next storm, we're gonna be right back to where we were. So, you know, we can actually do this before they condemn it, but now that it's condemned, you bought you bought an insurance policy for $400,000 and $200,000 in flood. So, in any case, if it's condemned, you can't build it back, right? You're gonna have to spend $1.2 million. So that means you're gonna have to go get a home loan. But when you build that house back, it's gonna be worth $4 million. So you're in good shape. Now, if you don't wanna do that, sell the lot for $1.5 million, and you only paid $800,000 for the house and the lot. So you're in good shape, right? But again, most people, and I've had this, they're like, no, I have replacement cost. I'm like, so you think that's gonna build you back the new $1.2 million house? That's not what replacement cost means, right? That's again, that's like a false term that we should stop using, right? Sure. Replacement cost. To a layman, that means, oh, you replaced my house.
Yeah.
But that means replace the same house you had,
Yeah.
not the new one that you have to build. And, you know, again, that's that thing about, you know, what does a claim look like, right? Like, they just don't want it to be what it is. And so I don't think you can make people happy with those old homes that are gonna have to do it. In Naples, they're in good shape because the property values are so high, right? But other places where the property values are going down, they would be in worse shape, right? And insurance can't fix that,
Right.
right? We can't fix the real estate market. We can fix the building, but we gotta have a plan. And so, you know, to me, I told the commissioner in Mississippi, I says that flood policy should pay him the limit, 200 grand, and his homeowner's policy should pay him the limit. And they offered him 12 grand. They're sitting there looking at the roof. There's only a couple shingles off. I'm like, that's like looking at a car that's totaled and only looking at one side of it.
Sure.
And windshield looks good.
You're good to go. You're good to go. Come around to the other side. Oh, no, I don't need to see the other side. You're good to go.
Oh, my goodness.
So, you know, and again, my pilot, I said, so were you happy with that? He said, well, it made sense to me. It wasn't a lot of damage. I'm like, dude, that does not make sense to me. Right? If I were the homeowner, I would be upset. And I told him, I said, I would write a letter to the flood company and say, look, my house is totaled, pay me the limit. And I would write the homeowners company and say, my house is totaled, pay me the limit, and see what they say. I wouldn't accept their crappy little offers that,
Did he already accept it?
well, I
At
don't
that
know.
point?
I don't know. Again, you know, when you start asking people tough questions, there's a point where you have to back off. You don't want to make them like feel really bad.
Sure.
Like, dude, I'm happy to help you any way I can, but, you know, all I can do is tell you what I would do. And to me, that's not an unreasonable thing to expect that if my house is condemned for you to pay me the limit,
Sure.
And then, you know, I'll go get a loan and I'll build a new house. I mean, he's living in his driveway in a trailer.
Oh, my goodness.
And they've offered him $117,000. I mean, that's why people hate insurance. Doesn't make sense. But this is, you know, the best thing about all of that down there in Florida is all the old shitty construction is now gone. Right, when water hits it and the wind hits it and then some debris hits it, it just disintegrates. The good stuff, the new stuff down there, it's got minor damage, right? So I do think, you know, we have to empower people to say, you know, you can choose to replace it anytime you want, right? If it gets so bad, or if, you know, we're gonna pay something, let's pay more and make sure we're moving stuff to the roof, so that every flood, we don't have a $16,000 claim again and again and again. But our focus is doing it for the cheapest price, right? No, we're not paying any extra money, just replace that air conditioner. And, you know, that's short-sighted. That means you're not in it for the long run, you're not a good partner. So I got involved in a case with a big Lloyd's syndicate, the biggest one. They sued me for some claim, and a lawyer in Chicago convinced them to pay $19 million on a claim and then just sue me. They actually labeled it in the letter, pay and chase, meaning pay the claim and chase Rick.
Oh, my God.
And, you know, the lawyer who sent me the letter said, you didn't do anything wrong, but we think you should turn this over to your E&O carrier. I'm like, well, I got a better idea. How about you turn it over to your E&O carrier?
Yeah.
So, and I did turn it over to him, but I told him I don't want you to pay it. You know, when I deposed the Lloyd's syndicate, they actually made a claim and got paid on their own insurance. And, you know, they were gonna pay $19 million, and I sued them in Utah. And that scared the plaintiff's lawyer, so instead of paying 19, they paid 6.5. Right, and I said, so, you know, I just proved how stupid you are. By filing one lawsuit, the plaintiff's lawyer went from 19 to 6.5. But, you know, they don't care. They were saying this is a $40 million claim. That's all they kept saying. And I'm like,
High anchor.
it ain't a $40 million claim. So at the end of the day, I spent $2 million. Now, I could have paid the $5 million on the E&O policy. I spent $2 million. Court told the big Lloyd syndicate, you can't make a bad business decision and then sue somebody else for your bad business decision. And they lost. Court ruled there was no coverage, they shouldn't have ever paid anything. And then their pay and chase scheme. And again, they, you know, I had other Lloyd syndicates say, Rick, you're suing the biggest Lloyd syndicate. You think that's a good idea? And I, well, if I was wrong, it would be a horrible idea. But since I'm right, yeah, that's what I should do.
Can you ever recoup the money you have to spend on suing them?
Well, I have insurance.
Sure.
Right, so I put in my claim for the $2 million. Guess what? They won't pay me.
Really?
Yeah. I mean, I am an insurance consumer that is very unhappy.
Yeah.
Jake with State Farm, if I ever see that guy walking down the
I
road,
saw that post on,
Yeah.
what was that, LinkedIn, I think it was. That was
I mean,
hilarious.
seriously, they, you know, have no focus on, you know, and again, I turn everything around. It's like, okay, am I an asshole or are they the asshole? So let's switch positions, right? If I move to their side of the deal and they move to my side of the deal, how would I treat them? And that's how everybody would want to be treated.
Sure.
Right? So some guy runs into my boat, right? State Farm, Jake, my insurance company, won't do anything. They basically told me, well, you know, Mr. Lindsey, and this is on a recorded call, we really don't do boats, we do homeowners. So you're gonna have to manage your own claim. And I'm like, well, you should tell people that when you take their money.
Sure.
You should say, look, I really don't know what the hell I'm doing, and you're gonna have to manage your own claim. And I'm like, I can do that. I run an insurance company. But I would think out of your 28,000 employees, you'd have one boat guy
Yeah.
come down here and help me out. You know, and they're like, no. So I do it all, including sue the guy that ran into me. He's with Travelers. And in boating, it's maritime law, so it's called a elision. It's not a collision, it's a elision. And that means that one boat's underway and the other one's tied up. Well, the boat underway, his excuse was the wind blew me. Yeah, that's kind of your responsibility, guy.
Brakes didn't work.
You know, so anyway, the claim was $400,000. State Farm had paid me 120 something. So I've paid all the rest. And I think, you know, if I'm a regular guy, my boat would still be sitting there.
Mm-hmm.
The only reason this boat got fixed is because I could pay for it. I did State Farm's job suing Travelers. I get with them and ask them to take over that case and help me resolve it. So Travelers, after 2 years of denying liability, which under maritime law you can't do, it's an elision, he says, oh, we're ready to admit liability now. Just sign this form. And of course, my lawyer, I'm like, so why would I sign that? Why don't they? Oh, it's good. It's a good thing. Now we just have to talk about damages. So now I learned a lesson, right? When I signed that form, that let State Farm get out. So State Farm recouped the 120 or whatever they'd paid me. They paid zero. And now I'm sitting there alone, holding the bag. So I helped them.
Wow.
They didn't help me. So, you know, again, that is disgusting to me. What should have happened is they should have paid my whole claim, and then they should have, with my help, got 100% reimbursement from Travelers.
Sure.
That's the way it's supposed to
Absolutely.
work. Why is this
Subrogation.
made so hard? So, anyway, I'm not happy with State Farm. I'm not happy with any insurance company.
Hence your podcast title.
Why insurance sucks.
Sure.
Insurance.
Yeah.
No, and I think, you know, again, it's the opportunity that we can actually make insurance a good thing, a helpful thing, but it takes that as a goal,
Sure.
right? Let's make happy customers instead of what we've been doing, which is kind of running away from our job instead of embracing it. So hopefully we can start doing a lot more business with you guys.
Oh, absolutely. Yeah.
And, expand our horizons into other lines too, because again, in the beginning, when AM Best wouldn't give me a rating, they said it's because you do too many things, right? And I actually think that's what gives you strength.
Mm-hmm.
If you just do trucking and somebody comes in here and starts cutting the rates, your business is gonna shrink, right? If you do restaurants, bars, taverns, homeowners, towing, you know, you have a variety of stuff. As other markets come in and attack your lines of business, that gives you the ability to not compete with stupid.
Sure.
Right? You move to the better opportunities. And that's actually ended up being our strength, right? When K&K and Philadelphia came in and started writing all my outfitters and guides business, I let them have it because it was too cheap. And now Philadelphia, they're canceling it all, and it's coming back. So, you know, you do have to be willing to let business come and go.
Sure.
Instead of just always, you know, moving it to the next cheapest market where you know it's gonna end up in, you know, a bad spot. So I would encourage you to, what I do is I look at the export list. You know, Utah has one, California has one. And if the state doesn't have an export list, it's still a hard-to-place item. Towing's on there, repo's on there, roofing, contractors. You can Google Utah export insurance export list, and it's a long list. And that is, you know, what I've always marketed to. Those people who I call them the land of the misfit toys.
Sure.
But they're actually good people that need your help, so
Yeah.
that's what I would target. Any other tough questions?
No, you've done a great job.
Yeah, that's awesome.